engagement is what they know. Le texte de notre
Can you guys hear me now? If you can please confirm. So you guys can hear me now? If you can please confirm once again before I start. Okay, good. So we will now start. Thank you so much for joining me. And good evening to everyone again. Before we start, let me just give you a brief introduction on myself. My name is Muhammad Abu Bakr. I am actually Dubai based, and I have a fellow membership from ACCA along with the full membership of Chartered Institute of Securities and Investments, United Kingdom. I am working in a private sector in a multinational here in Dubai, which has sub offices in Saudi Arabia and Asia Pacific countries. Related to the taxation, I can just only tell you that I have experience dealing taxation matters in Pakistan, in UAE, in Saudi Arabia, and in Philippines, along with the UK taxation system. So I hope there will be a lot of things which I will be able to share with all of you. So before we start to the actual syllabus of the F6 taxation, there are a couple of things which I want to share with you. And one of those things is actually how to understand our exam, our syllabus of this F6 exam. So before we go ahead, I think it would be better if we just confirm and double check what exactly we will be appearing for the exam. I mean, syllabus definitely will be covered at a later stage, but what exactly and we will be appearing for in the future, which will be in the December 2020 attempt. So if you, I hope you can see my monitor, which I will be using now to write a few things for you. Okay. So before we start, it is very important that we understand our exam. When we talk about the F6 exam, actually, this is not compared to the advanced level exams. It is kind of a basics exam on taxation. Why basic? Because this is the first exam on taxation. You will be actually learning at a later stage if you will opt towards the advanced taxation exam of basics. Okay, so you should not be assuming that the examiner will be actually requiring you to exercise that sort of advanced knowledge which you should be expecting to learn at the P6 stage. So when we start, when we see our exam pattern and everything, okay, so we will have actually 3 sections in our exam, section A, B, and C. And there are some guidelines which are available from ACCA as well, from all the examining body as well, and all the other, the curriculum available. So exam section A is actually is an objective test portion. Objective text portion means you will be required to answer in sort of multiple choice questions or in sort of fill in the blanks sort of questions. So you should be expecting in this portion that there will be some sort of multiple choice questions. Multiple choice questions are where you have multiple options to pick the right answer. And fill in the blanks means, it means in taxation, you will be required to calculate something. In terms of, let's just say, they will be asking you to calculate Mr. A's income tax. or the taxable income. So you need to calculate exactly and put that number in the fill in the blank. So it will be 15 objective test questions of 2 mark each will be asked from you. So in this part, as you can see, 15 objective test questions of multiple choice will be asked from you. Now, and the fill in the blanks. Now, before I explain further, in most of the other ACCA exams, you can expect that, or there is a guideline available on all the exams, that in that portion of your exam, you should be considering that portion of your syllabus. But for F6 taxation, there are very specific guidelines from the examiner that you should be expecting any part of your syllabus in any area. It means in any section, either in section A, B, or C, you should be expecting any part of your syllabus. It is not necessary that you should be expecting in section A the first 30% of your syllabus. No, it can be either from income tax or any other portion. Before we go ahead, let me just tell you what exactly the syllabus portions are. One of the major portions, actually, I can tell you 40% of your syllabus is actually income tax based on individuals. There are further sub-portion or subsections of this area, which we will be learning, but income tax area is actually 40% of your syllabus. Second portion is actually on capital gain taxes or chargeable gain taxes, which means that when you are selling something, an asset, and there will be a profit on disposal of that asset, you should be paying tax. This is a pure or simple definition of capital gain taxes. Then we have corporation tax, which means companies, how exactly companies supposed to pay taxes. There are separate regimes, separate laws, separate everything on companies. And then we have value added taxation and other portion or administration part of your syllabus. Now, before I go ahead, it is very important, again, I would say that you should be expecting, you should not neglect one single part of your syllabus. Let's just say when you are actually compiling up and learning everything and writing it down, that whether you have covered everything or not, and you missed, let's just say 2% or 1% of your syllabus, in my opinion, you should be expecting that 1% will also be tested in your exam. So maybe you will end up, you can say, skipping, or you will end up having an issue with even a 2-mark question. So you should be expecting that your examiner is quite diligent in this matter, that he will set your exam in a way that all of the syllabus is covered. So section B is actually a total of 3 questions will be there. Total of 3 questions means there will be 10 marks each on each question, and I mean 10 marks each for each question, and then each question will be based on a scenario. Now, scenario means when you have a proper background of the question. Proper background is Mr. A works in company ABC for so and so long. For this year, he has earned so and so income. He has a house and he has a car which he uses for. So this type of scenario you should be expecting. So there will be a story. Let's just say, in my childhood, there was a famous story on a dog who was like, he was kind of greedy after a bone. So they will tell you the whole story, and from that story there will be 5 questions. You should be expecting 5 questions, because in most of the cases in the past exam papers, you will see that they were asking 5 questions. Why 5 questions? So they can divide your question into 2 mark each section. So you have a whole scenario, and then there are 5 questions at the end related to that scenario. So you should be answering. Now that questions can either be, again, a multiple choice question, which you just only need to pick the right answer, or maybe there will be some sort of brief calculation involved. So section C is actually the pure, the manual sort of section, where you will be having 2 questions of 15 mark each. Now, examiner has already mentioned that he can flip these sections into each other. It means he can put section C after section A, and he can put section B here at the end. I think this should not be the problem for anyone, because you will be, if you have covered the entire syllabus, so this should not be the problem for you. So in this 15 mark each, in our time also, we passed our exam in the era when there were you were required to actually write it down on a blank sheet. So these questions are actually that sort of question. You will be having a complete constructive scenario, and you will be answering them into an Excel sheet. And we will learn how exactly you can quickly and efficiently plot your answer and write down everything without wasting any time or any extra effort. That will be a separate part of our lecture. But here in the beginning, you should know that the last section of your exam will actually require you to write down using your computer's keyboard in an Excel sheet. So just as a brief again, you will have a section A, which will be having 15 questions, okay? And you will be having 2 mark each question, and then you will be having a section B, which will be having 3 questions of 10 marks each, and they will be scenario based questions. So they will give you a scenario so you can actually understand the entire story of the question, and then you will be answering maximum up to 5 questions related to the same scenario. And then again, section C, there will be 2 questions of 15 marks each, and they will be constructive scenario based, and then you will be answering them into by writing them down into the Excel sheet provided in the exam. Now, very importantly, this last part of your section C, he can also divide. I mean, the examiner can divide the entire question into as per the category of the marks. I mean, if the question is 15 marks each question, you can expect maybe he will divide the questions into 5 subsections. He can also ask you to answer as a whole to calculate somebody's income tax computation, and then it will cover the entire 15 marks. Or he can divide the question into income tax and then other portions. So the first requirement will be giving you 3 marks, and the second requirement will be giving you 4 marks, and then another requirement will be giving you 2 marks, and then another will be 2. So it can also cover like that. So most importantly, you should know how exactly and what exactly will be brought in front of you when you are going to sit in the exam. So there are 3 sections as we discussed. Now, going forward, I'm going to erase this thing. I hope there is no need for these things now. So we'll go ahead and start the first chapter, which are the basics of taxation. Now, basics of taxation, before I go ahead, let me just share my experience with you. And this will really help you in understanding the taxation environment. Why we have taxation in the world, where people, they have their own money, why I have to pay tax from my own pocket, or let's just say from my salary, or let's just say if I am an entity or I'm the owner of the entity, why I have to pay tax to the government from the profits I have rightly earned. There are 2 reasons. Socio-economic is a very famous word these days when the entire world is actually struggling with poverty, climate change, and everything. So people are asking that there are socio-economic benefits attached with the taxation system as well. Now, what is the economical benefit? Imagine government is an individual, is an entity. Being an individual, why I need money, why I earn money? The sole reason is so I can meet my expenses. Same way a company is earning, so company can make profits and grow and meet its expenses and give the profits to the shareholders. Same way a government also needs money in terms of revenue from the general public, so they can also spend and invest in the right areas. the economic factor of the taxation system is that when you collect money from the people who are actually earning well, you will be able to spend that money to the sectors where people actually need. So imagine when you are a developing country, I'll give you the example of Pakistan, let's just say, or any other developing country. They have lots of sectors available, let's just say healthcare or education or infrastructure, building more roads and rail systems. So their aim that they will be collecting that tax and investing into those areas. So that's the economical factor. So when they will invest in those areas, the economy will flourish and the country will actually grow. So that's the economical factor. Spending by the government, as rightly mentioned here. So spending by the government, the spending will only come when you will be able to, what do you call this one? To collect money from the people. So the second factor is the social justice. Now, social justice is also a very hot topic. Why? Because people, they tend to believe, and this is kind of a reality also, that there is a social injustice in the world. Somebody who is actually poor will become more poor in the future, and somebody who is actually rich today will become more rich in the future. It means so there is a wealth mismanagement in the society. This is one of the concepts. So when we try to tackle this area, government claims, and this is actually a right claim, that when they collect this money and they invest into the required sectors, to the needy people, into health system and education, they are actually making a balance out of it. So imagine if I have $1 million today, and nobody can actually take from me, of course, because that's my money. And today I decide I am not going to touch that money or invest that money into any other thing. I just want to convert that money into gold or into US dollars or British pounds, and then I will keep it with me. Do you think, is there any benefit of that money to the outer world? I don't think so. Or let's just take an example. If I start investing that money into shares and bonds and stocks, the return will come straight to me. So it means that investment is making me rich directly, and I'm not giving it back to anyone. So that's why government says that they are actually taking a small portion of your earning and investing it back to the society, so there will be a balance. So the poor will become little bit wealthy in the future, so he can also afford the luxuries of the life. He can afford good education, good home, good car, and everything. So this is the social justice. So these are the two factors which we have discussed. I hope I was clear enough. And if there is any question, you should be letting me know. And I think I should be mentioning this point of raising questions in a more emphasized manner, because we have this session online where I cannot see you, I can't really hear you. So this medium, this camera is the only medium we have. So if there is any questions you have, you should right away ask me without any hesitation. This is not the first time that I am actually into teaching anyone. I was also teaching before also, and I was actually related to some other seminars and other ACCA Middle East also. So I don't really mind that people asking questions. It is actually good. That is your right also to ask questions. And I will also feel comfortable that I am actually making you get that rightful thing which belongs to you. Actually, my job is to share that knowledge as per the best of my skills. And your right is that you should be learning everything in a proper manner. So I will be keep on asking this question, whether I was clear on my point, so we can move forward. So you should right away say, no, can you please repeat this thing? Or hold on, write anything in the chat box. It will appear on my screen, so I will repeat that part again. I hope we will. we will follow this. So I really appreciate if you are going to interact more and more, because that will make me understand that how students are actually gaining everything. So what is your speed? My speed might be very quick because I know things already, and frankly speaking and practically, I am not the one who is going to be appearing in the exam. You are the one, so you have every right, and it's sort of a duty also. You should be telling me, giving me the feedback. Can you please repeat that part again? Or you can just write anything, hold on, repeat, or even an R will make me understand that you want me to repeat that part. So let me just erase this part so we can move forward. I hope I will not be repeating this sentence again and again of erasing. Anyway, so we have now the types of taxation, and this is actually those 4 types which I explained earlier to all of you, that what exactly we will be learning. In the UK taxation, Her Majesty's Revenue and Customs is the main authority. Like in Pakistan, it's Federal Board of Revenue. In Philippines, it's Bureau of Internal Revenue. And then we have in UK, Her Majesty's Revenue and Custom, which is HMRC. Here, they have comprised a number of different taxes. So first portion is the income tax, which is very popular. I think everybody know, there is no need to emphasize on this part. Income tax is actually on individuals. When it comes to companies, there is a different name for that. So when it comes to individual working as an employee somewhere, or individuals having their own venture, a dentist having his own shop, an IT expert giving freelance expertise to the people, both employed and self-employed people. When it comes to that area, when it comes to the area where we should be dealing with individuals, income tax is the definition. National insurance contribution, this is very basic also. Almost everywhere in the world you will see similar names, similar things with different names, I would say. It's kind of a social security where companies and individuals are bound to invest a small portion of their income into that part. Now, payable by individuals who are either employed or self-employed on their earnings, also payable by businesses. In Pakistan also, in UAE also, everywhere in the world, people are actually required to contribute into national insurance contributions or social security contributions. There are different names, but it does exist everywhere in the world. Capital gain taxes, as I mentioned earlier, capital gain is a different type of tax which is not based on the direct earning, which is not actually a routine earning for you. Why not routine? You will not be involved routinely or daily or monthly basis when it comes to capital gain tax. Why? When you are earning as an employee, you will be taking salary every month or every week. It depends upon the system. Here it's monthly. In UK, it's weekly. In Australia, it's every 2 weeks. So it depends. But when it comes to capital gain tax, why it is not kind of a routine? Because you will not be selling your assets every day. It's quite rare, considering both individuals and companies. Why? Today I own a car. I didn't buy that car, so I will be selling it after 1 month. Maybe I will sell it for after 1 month. Maybe there's some sort of extraordinary scenario. Let's COVID-19 situation. Lots of people are selling assets these days. So these days it's kind of normal that people are selling their assets because they are into different situation, some sort of extraordinary situation. But in a normal routine, I don't think so that people will be selling their assets or companies will be disposing their assets on a routine basis, unless something is deteriorated, something is actually closing down. A plant and machinery was being sold by a company. Why? Because that area that factory was actually closed down. There was no operations. So they decided, let's sell this plant and machinery, then let's sell this entire land and building also. So when it comes to selling an asset, anything can be an asset. This is an asset. This laptop is an asset. This building is an asset. That land is an asset. So when it comes to disposal of capital assets, include land, building, shares, or even antiques. Now, why antiques? Because antiques are also valuable and nobody buys antiques also. So they will be appreciating on some sort of price in the after 10 years or 100 years, let's just say something which belongs to Roman era is very valuable these days. And every day passing, it is actually gaining value because those things are antiquities, and antiquities are in demand. A painting by a famous painter, after 1 year, if today it has a value of $1 million, maybe after 1 year, it will have a value of 1.2 million. So I bought a painting for $1 million. And after 1 year, I will be selling the same painting for $1.2 million. It means I just kept that painting in my house. And after 1 year, when I sold it, I got a profit of 0.2 million. So I should be paying tax on that 0.2 million. So there is a differential. If there is an appreciation in the price, depreciation when the price will go down, appreciation means the price will go up. So when the price goes up, it means you have an earning. And those earnings are subject to tax, and that tax comes under capital gain taxes. Inheritance taxes. You should be expecting inheritance taxes being tested in the exam with income tax. Why? I will tell you. Because as you can see from the name, inheritance tax means you got something inherently. My father, he owned a farmhouse of 50 acres. We are 3 brothers, let's just say. He gave me 10 acres. When he gave me in his will that Muhammad will have 10 acres, it means I just got those 10 acres for free. Yeah, I didn't pay for those 10 acres. My father paid. And before his death, he gave a will. He wrote down in the will, my youngest son, Muhammad, will have 10 acres. So I should be paying tax on those 10 acres. So that's the inheritance, which comes from the inheritance. You can see the word even, it says the meaning itself, something which comes to you inherently from your parents. So it also will be taxes, as I said, with income tax part. Why? Let me just put one small example. It will be very easy for you to understand. When the examiner will ask you to calculate Mr. A's tax based on 1, 2, 3, 4, 5 things, he can also add 2 more lines at the end. Mr. A received 10 acres from his father, from his deceased father. Calculate inheritance tax also. He cannot include this part with corporation tax, with value-added tax. So most probably, whenever examiner try to set a question mixed with two, I can say, sections of your syllabus, he always mix it up with income tax part, because here we can see also related to individual, here also individuals. So let's just say payable by executors on the value of the estate of a deceased person. When somebody's parent will die, father or a mother, they will give that asset to their child, so that child should be paying tax. Child should be paying tax, even though it's written here payable by the executors. Executors means my father's lawyer. When he will be distributing the wealth among my siblings, among the children of my father, including myself, he should be seeing that I am going to transfer 10 acres to Muhammad, and before the transfer or at the time of transfer, we need to pay tax on that because Muhammad is receiving it for free inherently. So this is the reason why it should be taxed with income tax, first thing, and why we call it inheritance tax, because it is given by a deceased person to his children or one of his children. Also payable in respect of certain gifts during individual lifetime. Yes, you can also pay. Now the question must be arising in your mind, why a person should only give something in his will? He can give also in his lifetime also. Yes, that's very common also. Same way, it will be treated under inheritance tax because it is coming from the parents to the child, and that is considered gift. So when the person is giving me a gift, I am receiving that. Let's just say I received this pen free. This pen today is an antique worth 50,000 pounds. I received it for free. If today I sell it in the market, I can receive 50,000 out of it. So that receipt of benefit towards me is actually making me pay tax on the market value or the value available in the question. We should be not be concerning that part, because that's a very practical thing, that what should be the market value and everything. So the market value of that particular asset will be available in the question. So that's the most important part. So let me just go down on the corporation tax part and erase this thing for you guys. And yes, so, and then we have corporation tax. Corporation tax is very simple, as you always, I think everybody knows, it related to the companies. The companies should be paying taxes like individual pay tax on income tax, as an income tax, I mean. Now, when it comes to companies, they pay on their incomes and gains. Incomes and gains, what is different between income and gain actually? It means same way when you have profit in your P&L or statement of other comprehensive income, when there is at the end there is a profit, it means you have to pay tax. So if there is a loss, no, there will not be any tax for that particular year. So if there is an income or a gain, you should be paying tax. Now gain also giving you the hint of capital gain tax, if you see, because gains can arise from either from the routine business operations or by selling anything. So when it comes to the companies, we call it corporation tax. And then we have value added tax. Value added tax, I think you guys are familiar with that, because now there's a portion involved in the F3 exam. So value added tax, there is a definition. I hope it will enlighten your mind a bit. Payable on supply of goods and services by the final consumer. Of course, final consumer. Why final consumer? Why we call it value added tax? So let me just clear that part. Value added comes from the word value addition. I am a farmer. I grew wheat in my farm. So that's the first step. I put the seed. So there is a plant now and I have more grains of wheat. Value addition. So I have added the value to one grain and multiplied them into so many grains. Maybe I put seed of 100 kg. Now I have 500 kg from that farm. So first value addition, I will be paying tax at that point. Then I sold it to another buyer. When I take that wheat and I sold it to Mr. X, who is going to make flour out of it, it means at this first stage, I should be charging Mr. X value added tax, because that's the first stage. Second stage is when Mr. X will create flour out of it. So he is actually putting, or he's actually making another value addition by converting that wheat into flour. When he will sell that flour, he will also charge value added tax. Again, that flour is now in the market. There's a guy who runs bakery. He's going to make bakery items out of that flour. When he will convert that flour into bakery items, and then he will sell that bakery items out in the market as a retail, he will also charge value added tax. So if you see, there were 3 steps involved, from wheat to flour to bakery items. At each stage, every seller is charging buyer value added tax. That's why we call it value added tax. Whenever there is a value being added to the product, you have to charge a tax. This is the exact and pure definition, even the word by word definition of value added tax. So moving forward now, this is the first step you should be learning. You will be learning in this area. What is the difference between direct and indirect taxes? Let me just tell you, this chapter only comprises of those stuff which will make you understand for the future. I don't think so, or very rarely somebody will ask you a question that to differentiate between direct and indirect taxes. You should be learning, that's a plus point, of course. You should know actually as an in-depth knowledge that what exactly we call direct and what exactly we call indirect taxes. So what is actually direct taxes? A taxpayer pays direct taxes to HMRC. Direct taxes revenue are based on income or profit earned, received, for example, income tax or corporation tax. Why we call it a direct taxes? Direct means, even you can see from the word itself, which is directly related to somebody. It means I am an employee and I earn £2,000 per month, and I was liable to pay £100 taxes on my earning. HMRC will take that tax directly from me. That's why we call it direct taxes. Or a company who earns or make profits of £100,000 and they were liable to pay £5,000 tax on that earning, HMRC will collect the tax directly from that company. That's why we call it direct taxes. As you can see, income tax and corporation tax is the ideal example of direct taxes. Direct capital taxes are based on the value on the dispose. Again, you can see why capital taxes direct are included in the definition of the direct taxes. Why? Again, I will sell this asset and I will be the one liable to pay. I will be the one liable to pay HMRC that money, that tax portion of the gain. Now, let me just give you what is indirect, so there will be a perfect clarity. Indirect means, again, as I mentioned in the direct, I am, just remember these words, I, being an employed person, I am liable to pay my income tax to HMRC. Now, what is indirect tax? Indirect tax is when the person, the taxpayer, the tax is being collected from taxpayer via an intermediary. What is intermediary? Or why we call it indirect? The sole reason is, I'm going to put the same example again. When that wheat farmer sold his wheat to that person who was going to make flour out of it, he charged him, let's just say, on £100, he charged him £15. He is paying £15 to the farmer, so it is the responsibility of the farmer to pay that £15 to HMRC. It is not his responsibility. He has done his part already. by paying him on top of 115. So it means it is not direct. Why? This floor mill guy is not paying 15 pound directly to HMRC. So if we make a triangle out of it, so if you see here in the indirect taxes, this is HMRC. I'm sorry, my handwriting is something like this. Okay, so, and this is Mr. F, the farmer, and the floor mill guy. When he will be selling him anything value 100, he will be charging 15 as tax. So floor mill guy will pay pound 115 to Mr. F. So Mr. F will have 100 his own money, 15 tax. He's gonna take 15 and pay to HMRC. So that is why this is indirect tax. I hope I was clear. If I'm not clear, please let me know before I move forward. So direct taxes is when the person who is actually paying the tax out of his pocket is the one who is liable to pay or submit the money to HMRC. When it comes to indirect, the person who's paying the tax is not actually liable to pay or submit the money to HMRC, but the person who is collecting the money is, like in the farmer's case. Farmer will receive his price plus tax. He will put that 100 pounds in his pocket and pay 15 to the HMRC. This is the main difference between direct and indirect. You can say, we usually use this terminology of this person is directly related to my department, but this person is not. He's only indirectly related. Why? This person works directly under me. He is in finance department. He is my assistant. But this person, he is actually from HR, so he's indirectly related. He only seeks my advice when it comes to remuneration part. I think this is a very clear example. So before I move forward, if there is anything you want me to elaborate more, please go ahead and ask. And before I move forward, you should feel free again to ask me anything at any point of stage, because this is how I will also understand that you are learning. So are we clear? So before I go ahead, if there is any question, again, I would say there is a chat box. You should write something that will pop up in my window. Okay, so okay, I am actually receiving some messages here. Okay, there are some questions. In the section B, is there any specific chapter in the section B? No, there is no specific chapters in any part of the syllabus. You should be expecting in section A, B, and C that he can relate any part of your syllabus in anywhere. Let's just say there will be a multiple choice question on income tax in the section A also, and there will be a constructive question also in the section C for 15 marks. So there is no specific guideline available that you should be preparing your section A from that portion of your syllabus. Okay, so there was another question. Okay, again, there is a problem. People are saying I can't hear you. So if there is any issue, please let me know again. I will try to address that part again. On economic part, can you please repeat again? Okay, economical part. Taxation works in a way that government also needs a revenue. Like I need salary, a company needs revenue also. Same way, why I need money, salary, because I have my needs. I have electricity bill to pay, fuel for my car, maybe an installment for my home mortgage installment. So in the same way, government also has needs. Now, what type of needs government has? Government actually will be spending in areas so he can flourish the economy. A developing country will definitely love to become a developed country so he can spend in the required areas. Economical aspect is the same thing. So taxation, the collection of taxation is the revenue for the government or for the economy. So when you will be able to collect enough or more funds in terms of taxation, it means you will be able to spend in those needy areas, in those required sectors. Let's just say education. So if a developing country is focused that in the next 10 years, we will become a developed country, they should be investing in, let's just say, in trade sector, in industries, in education, in health. So this is the economical factor of the taxation, that how exactly the taxation system help the economy. I hope I was clear. But if there is anything you can, again, you can let me know. No, based on the trend of the exam questions, some lecturers mentioned that in section C, that corporation tax is most certain to come out. Again, you can see from the statement, most certain is not a guarantee, I would say. I can tell you, when I passed my taxation exam, that was the first attempt they tested ethics in taxation exam. That was the first time. We were not expecting. There were also guarantees in that time also that should be preparing that part and it will be tested in that way. So in my opinion, in my knowledge, you should not be focusing your exam in a pattern that your section C will be tested from that area. Yes, again, I would say corporation tax and both income tax and corporation tax are actually the major part of your syllabus. So when you should be expecting that whenever there will be a comprehensive question, it will be tested from either of these areas. But I cannot really tell you that it will be tested from corporation tax part. Maybe they will test in section C the corporation tax, or next attempt they will put that corporation tax in the section B. So there is no guarantee in this part that it will be tested in those specific areas. You can all, I will share the examiner's guidelines, which was recently published, I think, for the last attempt. You can see he has mentioned this part that he can flip, he can put the section B, which are like 3 questions at the end, and put section C, or to make section B as section C as section B of your exam. It means putting the 2 marks of 15 each in the middle and 3 questions of 10 each at the end. So you should expect, you cannot really guarantee at any point of stage that that you should be preparing your exam in that way. Preparing taxation exam, there is only one rule. You cannot skip one single portion of your syllabus, because again, I said, even considering the current, the pattern of your exam, if even you give me a chance, or anyone, or even if I give you a chance to make a reasonable exam questions, you can easily test all the areas. And that is the main test in your exam, because it is not a subjective question. If I should be also telling you this thing. There is a difference between a subjective exam and a numerical exam, especially when it comes to tax. Because when it comes to tax, you cannot expect anything which is very subjective. When it comes to subjective, the definition of being subjective is that my answer can vary from yours. Because I will write, in my opinion, auditor should have done this. Or in my opinion, company X is growing, not steadily, but it is growing. But in your opinion, you can say company X is not growing at all, considering 1, 2, 3, 4 factors. So that is a subjective matter. My answer can vary from yours. But when it comes to the law or taxation, if we both are going to answer correctly, my answer and your answer are going to be the same. If the required right answer was A or color black, we both will write black. So please, when you are preparing and making up your mind that you are going to study tax, you should be very careful that it is a law, and law sometimes just doesn't even require justifications. It is a law which is required to be adhered by everyone. Okay, so this is, I hope this was the last question. So yes, so we will move forward now. Thank you so much. Let me just minimize this part. Now, what are the sources of law? Before I describe sources of law, let me just tell you, UK tax system is actually one of the oldest tax system in the world. And when it comes to the sources, they have now many sources. I think I have an ideal example. In 2018, January, UAE implemented value-added tax. So right now, we have only one source of law here. That is the written law provided by the tax authority. But in UK, it's different. Why? So there was hundreds of years ago, there was a tax law written by the government. So that is the first source. Then there were so many cases appeared day after day, day after day, day after day. There were so many different scenarios, so many different debates. Every year, Finance Act was again reviewed, reassessed, and then it was amended accordingly as per the needs of the economy. So if I tell you practically how tax matters are being dealt, so first thing is you have a written law. So there is the Finance Act, a big book, maybe 1,000 or 2,000 pages. Then, so if a taxpayer will have an issue, he is going to appeal to the same tax department that you have sent me this notice, I disagree with you. He will have a hearing with the first officer. So imagine your sources are actually starting gaining, it's piling up. Now you have an opinion or the statement from an officer. And then you will disagree again. It will go to the tribunal within the tax department. So there will be a person who's gonna actually listen to you like a court hearing, and he will decide your case, that whether the department, the notice they have sent you was right or wrong. The moment you have one decision on, let's just say, income tax matter or value-added tax matter or corporation tax matter, that one decision become precedent. I hope you are aware with the word precedent from the F4. When there is a decision that become precedent, when it become precedent, you can actually refer that precedent in the future. I still disagree with that decision. I went to the court, to the higher court. So I hired a lawyer, we discussed my case over there, it took 4 months. Again, there was a decision. That decision will also become the part of the law, because that decision was decided in the court of law, and anything which is decided within the court of law becomes a law. I can refer tomorrow. I have a shoemaking business. I won the case. There was a notice that I should be giving them records of 20 years before. I won that case. Now tomorrow, if the tax department is going to ask same question to another shoemaker, he can refer my case saying, you asked the same in the past, this was a decision by the honorable court, you cannot ask me, thank you so much. So this is a source of law. Every day, sources are becoming more and more, it's piling up. So right, before you had a law, and then you had so many things. So what are those so many things? So when it comes to the statute and the case law, so statute is actually itself the law which is being provided by you. That is the main Finance Act, you can say. Second is you have statements of practice. As I mentioned, statements of practice, anything which was decided, anything. Now statements, you cannot call it, I heard officer of the tax department saying that tomorrow
Value-added tax is gone, you cannot refer that part. He was I don't know in what condition he mentioned that part. But anything which is decided in the court of law will become part of the law in the future. Material from HMRC websites, books, everything, leaflets, of course, in all the tax systems. Even right now, if you were being communicated through a business WhatsApp from HMRC to all their taxpayers, now today they are actually using WhatsApp also, they are using social media, Instagram, Facebook, anything which is published over there, all that parts become material and they are part of the law. So tomorrow you can refer in the code. I have a screenshot of Facebook. HMRC was saying that you should not be doing X and XYZ, and you can actually, that is a part of law. So third thing is detailed guidance. Now detailed guidance, why? What is detailed guidance? Detailed guidance is that part we call in the practical life commentary. Now what is commentary? Commentary is the same thing. You have a football match. There are two people telling Cristiano Ronaldo have the ball and he's going to make the goal and there's the goal. So all that, whatever we are hearing is commentary. What is commentary or detailed guidance in the law? When the law will tell you that definition of income tax is so and so, they are going to explain also all the terminologies. What is the meaning of individual? What is the meaning of employment? What is the meaning of self-employment? What is the meaning of you being this thing or that thing? Everything. Precisely speaking, when it, because I was part of the lots of taxation hearing in Pakistan, I can even tell you when you place full stop and comma, that also is a very huge meaning in when it comes to the law. So everything which is being explained in terms of commentary or anything, big books, everything is part of the law. Big books written by either HMRC or by private firms, which are being published. Everything is a law. Now you cannot write a commentary unless you are authorized one. So there are authorized publishers also when they write the commentary, detailed guidance, everything. That is also part of the law. So when it comes to internal manuals, what is this? So internal manuals are SOPs within the HMRC to deal with different scenarios. If there is a law available in the market for general taxpayers, there will be an SOPs and internal manuals available for us being the employee of HMRC. So I will also know if a taxpayer will come to me with some issue, how exactly I should be dealing with that. Extra statutory concessions. Extra statutory concessions are those parts where there was no particular law being applicable on that scenario. So there was a decree being specifically or extraordinary granted by the department to that specific case. A fair example in this part can be, there was in Pakistan, the agricultural reform was happening for a long time. So right now, taxes on agricultural parts are quite ambiguous. Because why? Because the farmers are not really into getting them registered with the tax authorities and everything. So whenever there's an issue related to the farmers, so they will see if there's a law there. If there is no law or any precedent or any case being decided in the past also, so they have to pass a special extraordinary decree to declare or close that case. So those are all, in all the system, there is always a loophole. There will be a new scenario. You have to deal with those scenarios extraordinarily. So when it comes to the part of the sources, again, there will be a law. So I will call it a book, actually. And then you have practices. All the cases being heard in the courts, in appellate tribunals, in everywhere, all those things. Materials being provided by HMRC on website, booklets, leaflets. I should be calling it social media also. These are very effective and very normal these days. Detailed guidance is the commentary which is being provided to understand the law, and internal manuals are for people who are working for HMRC, and extraordinary or extra statutory concessions are those when the things were decided when there was no directly applicable law available. So sources of law, why we have 5 different sources or 6 different sources? Because UK tax system is a very old one. They have covered all the parts. When it comes to taxation, you are earning 1 penny, it will come under some law. By all means, you cannot just say that it will be exempted, or you can just take away that money without being taxed. So it's a very comprehensive law. So on this part, if there is any question, please let me know before we move forward, and I remove this part. I'm sorry, I was not being able to see the questions before, so now the dialog box is in front of me. Is there any question before we move forward? Okay, we will be moving forward now. Let me just close this part and erase. So this was the first chapter of the basics. Now, if you want me to summarize this part, I am pretty sure that it is not really hard for anyone to understand the different type of taxation we have these days. Everyone is familiar. Even before joining the finance profession or starting your ACCA, you must be familiar with all these type of income taxes. Why? Because we have elders, fathers and brothers and uncles and family members who owns company or work somewhere, or when you buy something, a television, you will be paying value-added tax, everything. But the most important factor is, because if I am going to set the exam, I think there will be a chance where examiner can ask you, why we have Mr. X, he can put a scenario even. Mr. X has objected at why he is being taxed on his income, because he thinks he's a poor guy. Then you need to write those things, that it is in the benefit of the country that government is collecting this money, investing over there. So it is kind of a revenue generation for the government, because they cannot really generate revenue from anywhere. Taxation is the sole and the main source of generating the revenue. So now this part is a very famous part. Everybody loves this part. Why? Because you will see that in this part, lots of your other things which you must be thinking right now will cover. Tax evasion and avoidance. When it comes to the practical word, both these terms are very, very wide. When it comes to practical life, it's a very wide and vague term. Today you can call something evasion, tomorrow it will become avoidance, because people are smart, they know how to use law. But when it comes to just the learning part, the definition of evasion and avoidance is same like illegal and legal. Something which is legal is avoidance. Evasion means illegal. I mean, simply put, if you simply put something, evasion is illegal, avoidance is legal. What is avoidance? I was driving today when I was coming here, there was a stone on the 3rd lane. I start driving on lane 2. I avoided that stone. Simple. So I had an opportunity to avoid, I took that opportunity. But when it comes to evasion, it means I deliberately misled the department with either false information, false calculation, false statements to hide my income. So what is avoidance then? If evasion is hiding income, if evasion is misleading them, if evasion is misstatement, avoidance is when you know the law and you knew if you convert your scenario or if you change a couple of things here, Using the law, you can avoid being taxed. How? Very good example. I own this house, let's just say. And because I am earning some money, I gave my ground floor to some tenant and I'm earning some money. So I need to pay property tax. But I can avoid being taxed. Why? I can give the ownership to my wife because she's not earning. She doesn't have any income. When she will own, she will be paying the tax. So when it comes to her, being her paying the tax, she doesn't have any other income. So this property income will become so small, it will come under the non-tax portion, or it will not come under any taxable income slabs or brackets, and we will not pay tax. Just by changing the ownership. So I read the law, it says, okay, so when your income is low, you will not be paying tax. Okay, I have too much income, but my wife doesn't have. So I just played with the law. So that is avoidance. So tax evasion is, the term evasion summarizes any action taken to avoid or reduce by illegal means. Illegal means. Illegal can be anything. Anything which is illegal. I gave false income tax returns. I hide my income. I wrote, I don't have a car, but I have a car. I wrote this house is not under my ownership, but it was under my ownership. So anything when I'm lying, anything which is illegal, hiding, misstatement, misleading, anything. Suppressing information, as I say, failing to declare taxable income is a very common mistake. Failing means you had the opportunity to give your income tax return within a prescribed time, but you didn't give. So you had the opportunity to declare your income. You didn't provide that information on time. It means you doesn't really want HMRC to know how much is your income, and that was a deliberate action. And tomorrow a taxpayer cannot really say, oh, I am so sorry, I forgot. Even though there is a law also on forgetting. If you forgot, you can just raise your hand and say, hello, I'm sorry, I forgot, I just want to edit my statement. If you go willingly, they will not charge you anything. But if they will find out, and then tomorrow you cannot say, oh, I'm sorry, I forgot. Oh, I'm sorry, I was sick. Oh, I'm sorry, I had guests in my home, or whatever, or I was traveling. So this is the illegal and legal thing. Or submitting false information. As you can see, as I said, anything which is illegal, submitting false paperwork or hiding anything is all tax evasion. Tax avoidance is using taxation regime to one's own advantage. As I said, I had the ownership of my house. I was being able to save tax by just changing the ownership under my wife's name. That's it. I took advantage from the taxation regime. Regime means the taxation law. The simple word is taxation law. I just used that part. I'm sorry. Let me just quickly erase this thing so we can move forward. So I just took the advantage of the law which was available right in front of me, or I had a good lawyer, tax advisor who advised me. Simple. So tax avoidance is the advantage by arranging your affairs to minimize your tax liability. Normally, these type of advices normally comes from your tax advisors or lawyers or anything. They advise you if you change the ownership to your wife's name, or you give this asset to your child right now, and he will be paying tax on a very lower rate because you will be, on the other hand, you will be paying tax on a very higher rate because you already have so much incomes. So these are the advices which is being made by the advisors to the taxpayer so they can save money by just using the mere factor of the tax law. The term is also used as described as tax schemes that utilize loopholes. Yes, in some practical scenarios, this is actually correct. Because Frankly speaking, tax law is also being made by individuals, and there are loopholes when you create a system or you write a book, or today you create a system and today you think there is no loophole, but then there was a genius who read everything in proper manner. He spent his time and he found a loophole. It's like you can say when you're driving, you have a blind spot. So that's why on your left or right mirror, you have a small, convex or concave, I'm not sure which type of mirror, so you can see that blind spot. It's simple as that. Or you just turn away like that to see the blind spot. It's simple as that. So somebody find a loophole and he will use that loophole because because the loophole was in the tax law. Now the tax department cannot really blame the person that how come you save money like this, because the loophole was from their end. He didn't do anything illegal. So tax evasion and avoidance, again, quickly, I will tell you something which is legal and illegal. Avoidance is legal because you are using or you are playing within the law, but evasion is actually illegal because you are misleading the Department of Tax. You are misleading or giving false information to HMRC, or you are hiding your income, hiding your assets. Okay, and all these things are deliberate. When you are deliberately actually hiding your income. So in the exam, I can tell you, maybe he will put a multiple choice question. Mr. X forgot. Mr. X did not put that asset in his wealth statement when he was filing his income tax, but it was not deliberate, and at the later stage he correct his statement. So that is not evasion, because he himself went to the HMRC, told them that that was an honest mistake and he wanted to rectify. But on the other hand, Mr. X owns 3 Lamborghinis, let's just say, or Ferraris, but in his tax return, he did not mention any of those cars. Those cars are being hidden somewhere in England, and that is tax evasion because he is hiding those assets. He is hiding his income. He is hiding those assets. He is hiding on his entire wealth statement, because when it comes to the practical life, everybody has to file a wealth statement on how wealthy he is, and all your cars and houses and everything will become part of that wealth statement. So this is the main factor. Please, if there is any question, this is the time. You need to let me know, please, before we move forward, because now we will be actually starting our next chapter. I will close this chapter with a summary, and then we will go ahead. So please, this is your time. Let me know if there is anything. Everything is clear? Shall we move forward? Good. Thank you so much for the response. I really love that you people are responding. I really love that part, because I hope that I will find more ways to interact with you. Probably WhatsApp is the next option in my head right now, but in the future I will try to find more ways to interact with you. Okay, I really love that part. Thank you so much. So let's move forward. And before we move forward, let me give you a summary. And I need water as well. So basics of taxation, we have learned that what is taxation exactly is. Taxation is actually a system to generate revenue for the government. I need salary, company needs income, so does the government. Why they need income? So they can spend in the required sectors. Okay, then we learned that part, that what exactly is covering the taxation system. So we have income tax, which cover individuals, both employed and self-employed. Then we have national insurance contribution, NICs, which is a mandatory contribution by companies and individuals so they can have some social security in their lives. Okay, we will learn this part later, but you should be considering it as a social security contribution sort of something. Then we have capital gain taxes, when I will sell an asset, being company or being individual, I purchase that asset for 100 pounds. Now I'm selling for 120 pounds. I have to pay tax on top of that 20 only, because that is the gain. Corporation tax is same like income tax, but for companies. Company has a profit, company has an income. Income means profit, again, net income, something like that, or precisely profits before taxation in your P&L, or at the end of your other comprehensive income, if you precisely say for your F7 exam or like that. So they have incomes or profits, so they will be paying corporation tax. There are different types we will be learning at a later stage. By the way, there are separate 7 to 8 chapters on income tax portion only, and there is sort of 5 chapters on your corporation tax, 3 chapters on your inheritance tax, 2 chapters on your value-added tax. So you should be, but there is good part is I have already compiled all the material to study for you. So there is no need to buy anything, please. Don't buy anything. If you have even the plan, don't buy anything. Even the exam kit we have for you, you will have. I will check with the management exactly when exactly they will be sending that thing to you. Okay, so there is no need to worry. And I have developed these notes or these interactive lectures in a way, so these pictures will start coming into your brain when you will be attempting your exam. Because when I was a student, I used to do this thing, and this is very common in my opinion. You are forgetting something, but all of a sudden that page of your book will come into your mind. That is very important. I have developed these constructive notes in that manner. Okay, then we learn value-added tax. Value tax is on a commodity which is being sold to person, another person, and the end consumer will pay the tax. And then we have direct and indirect taxes, which means direct means when tax is being paid by me as a taxpayer, and indirect is when it is being paid by somebody else, but actually submitted by somebody indirectly, the farmer example. Yeah. And then we have sources of tax law, which is mean the tax law itself, the statements from the practices, the case decided, the detailed guidance or commentary by the HMRC, internal manuals which is being provided to the HMRC department, within the HMRC department, and the material and other brochures and booklets and manuals and social media posts and everything which is being available on websites and everywhere like Facebook, Instagram, LinkedIn, everything are also part of the law. And then extra statutory concessions means extraordinary decisions being made by the HMRC for specific scenarios or anything. And then we have our last part, which we learn, tax evasion and avoidance, my favorite part. Why? Because it defines the legality and illegality of between two things. So avoidance is when you play or you use the law in your advantage, but evasion is when you hide something which is illegal, when you present false statements, which is illegal, when you present misleading information, that is illegal because you are lying to the department, and that is evasion because you are deliberately trying to save money, trying to pay less tax, which is illegal. So that was the first chapter of our exam or our syllabus. Now, before we start from here, I just want to make sure that we all are on the same page. But I am so sorry, let me just pick it up. So, because we want to learn something which is now quite okay. What is HM stands for? Very good question. This is my mistake actually. I should be explaining this part. I thought everybody Okay, I think there was a glitch here from the Zoom side, which I am not sure why exactly this thing happened, but let me just see, it should not happen again. Okay, 1 second. Okay, is everything good? Because I don't think so. I was not expecting this thing. Can you guys hear me now? It's good now. Okay, I'm so sorry. I was not expecting this thing. Maybe there was a glitch from Zoom side. So I'm not sure what exactly happened. So this portion is actually one of the most important part, which I was actually trying to tell you. Now, before we move forward, you should know that this part, which we are going to start now, is actually the most important part. Now, before we go ahead, I was talking about the word HM, which was being asked by someone, I'm not really sure. So what is HM? HM means Her Majesty's. Why Her Majesty? Because in England, there is a queen. It's a kingdom, it's not a democracy. We have in Pakistan, Federal Board of Revenue. Why we have a department? Why it says federal? Because it's a government. It's under the government. We don't have a king or queen there, so that's why we don't call it in the king's name. So when there will be no more Queen Elizabeth and there will be a king, let's just say, it will automatically become His Majesty's Revenue and Customs. Now, why it says Her Majesty's Revenue and Customs? Because everything in United Kingdom belongs to Her Majesty. I think this is a clearer definition of the word HM. Okay, so are we clear? So we can move forward now? Okay, let me just pull this one. Okay. So this part is actually the major portion of your syllabus, income tax computations, the basics. Now, before we start this part, I just want to make sure that you should know that this is that area which can be tested in maybe 5 of your multiple choice questions in section A, maybe one, not maybe, potentially one of the questions in your section B of 10 marks each, or maybe one of the questions in your section C, in combination with something else. Let's just say capital gain tax. Let's just say with an inheritance tax. Okay, so this is very important. I will try to take things on a slow pace so you can also digest the initial knowledge. When we will be after 4 lectures, there will be a little bit, the pace will be kind of different, a bit fast. It will not be so much fast, don't worry, but it will be fast. And let me just tell you why. Because all those things, I want you to write it down somewhere. I will also try to write it down here. First, very important thing about the pace is your syllabus is actually not a small syllabus. Okay, your syllabus is a combination of 5 sections of multiple chapters, and we have only 20 to 24 lectures. 20 to 24 lectures mean we have precisely 44 hours. I will even make it 46, 48 with some extra lectures, so don't worry about that. My aim is to cover everything and to practice also. I will not tell you the exam techniques right now because you are not familiar with the syllabus, but if there will be exam technique, I will definitely share with you. first exam technique, and this is why I'm telling you, you should be very focused, is you have precisely 1.8 minutes per mark in your exam. You can spend 1.8 minutes for 1 mark. You don't have much time. So a 10-mark question should be dealt with completely in 18 minutes. 3.6 minutes per multiple choice question. You have to read, understand, answer it. That's why I was talking about the pace. If my pace will keep on working on a slower level, trust me, I really fear that it will make troubles for you in the exam. So after few lectures, and few means 3 or 4, there will be a fast pace. Okay, so I hope you guys don't mind that. Okay. Second is, I will try to put you in the same scenario as the examiner will put you. How? I'll tell you. Now, if you see all of these headlines and these markings, and again there's 2.2, there was 2.1, okay, and all these red marks and all these dates, everything is written for a reason. So I skipped all those unnecessary extra discussions and everything from the book or from the notes or anything, from the study material, I would say. So that's why when we are working on this part and we are learning stage by stage, page by page, chapter by chapter, you should be very focused, and you should let me know if there is anything being ambiguous from my end. So we will cover that area again and again. I don't mind, as I said. Okay, so now we will, so that was the only exam technique. The first one I have told you, 1.8 minutes per mark you have. You don't have more. I'm sorry, I cannot really do anything about that. That's the proportion of your each mark has in terms of time. Okay, now we are going towards our chapter 2, which is actually, in my opinion, the first chapter, income tax computations, the basics. As we discussed before, income tax is actually levied on anyone who is employed or self-employed, as far as the person is individual. It's not an entity. It's not a federation, fund, charity, or anything. Individual. Doesn't matter which sex, men, women, anything. Even on children, and we'll discuss why children. So as we discussed before, you should be expecting a 15-mark question on this part, because not on this chapter, the chapters which will connect income tax again at the later stage, which I said until chapter 7, I believe. Basis of assessment is the first thing you will learn. So what is basis of assessment? It means on what basis we are going to assess that individual who is going to pay tax. Assessment of that individual who is going to pay tax. Individuals are assessed for income tax on their income arising in a tax year. Income arising in a tax year. That's it. Income arising mean my income, being an individual, coming from any source in a tax year. What is a tax year? It's not 1st January to 31st December. In my opinion, it has a very awkward date. Okay, I never liked this date. I don't know why they have this one, but it has from 6th of April every year. Let's just say 2019 to 5 of April 2020. These are your dates. This is the 2019 and 2020 tax year. There is no explanation on this part. Again, this is coming from HMRC. They have declared their tax year long ago, from this date to that date, and we are going to work on that. Maybe it is just to confuse people. So for this year, we have 6th of April 2019 to April 5, 2020, which is referred as a tax year, 2019 and 20. Now, again, I am going to ask you guys, if there is anything, please ask me now. Because I remember when I was a student, I was stuck in this part. So if there is anything, please go ahead, ask me. Because these things are going to be making the basis for you. Okay, can you repeat? Please, why not? Okay, basis of assessment. On what basis you are going to assess me? I think the meaning can be more clarified. How a person who is being accused for a theft, he is going to be assessed or judged in the court of law. So there's a law. The law says if the person stole something, he should be punished with 6 months in jail. There was a proof, he was proved guilty, sent him to jail. What is our assessment in the tax? The person will be paying tax if he is an individual, he has an income in a particular tax year. 3 things: individual, he has income, some pounds, let's just say how many pounds, we'll figure out later. And in that particular tax year, which is 6th of April 2019 to 5th of April 2020. So if I had an employment income from my company from these dates, starting this, ending this, from this date to this date, I earned pound sterling 120,000 as salary. I will be paying tax. But if I tell you, I earn also in 31st March 2019, I earned 10,000 also. Do I have to pay tax on 10,000? No. Because this date, when I earn this money, this date is not falling in between these two. This was previous tax year. So when it comes to the question, maybe the examiner will try to trick you. He will give you a data where 4 types of income were actually related to our tax year. But one of the incomes were actually previous year. I'm sorry. So one of the incomes were actually belongs to previous year. So for the previous year, we should not be charging him with any tax in this year. Or maybe there will be a multiple choice question. He will just put a tricky date just to see whether you are reading everything clearly or not. He'll say, in 2019, 31st March, Mr. X earned 10,000 as a capital gain by selling his asset. How much tax do we need to pay? First option, 10,000 multiplied by 5%. Second option, 10,000 multiplied by 10%. Third option, 10,000 multiplied by 13%. Fourth option, none. But as per the law, in capital gain, let's just say, law says whenever you sell something and you have a gain, you have to pay 10% tax. Instantly, if you ignore the date, what you will do? 10,000 multiplied by 10%, 1,000. Yes. You take 1,000. That's the wrong answer because you didn't really put attention on the date. Okay. So a person earning something in our tax year for our exam until March 2020 attempt is 6 April 2019 to 5 April 2020. We should be careful with the date. So it was clear. I hope it was clear. Please let me know. Okay, is there any specific reason for choosing the month of April? I think we should write down to HMRC and ask them ourselves, but there is no specific reason. There is no reason. It can be related with their fiscal year, but fiscal year again starts with 5 April and 6 April. There must be some other reasons. I will try to dig in. So, but right now, again, as I said, it's a law which needed to be adhered by the taxpayers. So everybody pays tax as per these dates. There is no particular reason. Maybe there should be a reason. I strongly believe there must be a reason. So I will try to dig in, but as of now, that is not part of our syllabus. That is a general debate that why they have picked this date. Okay, so are we clear? Shall we go? Okay, thank you so much. So now we are going to erase this part. I hope I can. So we can move forward to our next thing. Okay, so dates, please don't forget dates. 6th April to 5th of April. Trust me, it looks a bit awkward to remember this date because it's not even a start of a month, but trust me, it will be there. And even though these dates will be available in your exam question book also. But here is a second tip of your exam. Never ever think that you will be utilizing that question book, all the tax rates and brackets and slabs and percentages available. Never ever consider that option. Why? Again, same thing. You have 1.8 minutes. Imagine how many pages going back every time. Imagine just now you have completed income tax exam and then the question, and then there is a question on capital gain tax. You think it will be feasible to go back again and again and again? No, it will be a waste of time. So never ever consider. It will be a positive point that if you by any means, God forbid, you will forget something, you can refer it to question book, but ideally you should never consider that you will be referring to the question book. Okay, so now personal allowance. It starts the taxation. The first part is a personal allowance. What is personal allowance? I'm going to write down something here, so it will help you to understand. So what is a personal allowance? I am going to tell you that there is a country which has a tax system and it says from 1 to 200,000, 0%. Then from 200K to above all income, you have to pay 15% tax. So what is this 200,000? It is my personal allowance. Personal allowance is actually a bracket which makes you to utilize a non-taxable portion of your income. It means for every individual, he is entitled to a personal allowance. What is personal allowance? Provided by HMRC. That is pound sterling 12,500. How we will be using it? Later stage, don't stress yourself. Only remember, for every person, there is a personal allowance. So when we will be calculating his income, this personal allowance will, lower down or decrease his taxable income by this amount. So imagine, so there was a calculation of property income, there was an employment income, there was of, let's just say, other income from saving. So 1, 2, 3. Total income, taxable, minus personal allowance, 12,500. Now this is the amount on which he will be taxed. So personal allowance is like a tax-free income available to all individuals. Now remember that part when I said in my example that a husband can save the tax by transferring the ownership of his house to his wife, and she is not earning anything. That is what it is beneficial to transfer. I earn 200,000 pounds. I'm a higher taxpayer. Any addition in my income will be taxed at a very higher rate because there is a pile of already income on my table. Whatever you add on top of that will be taxed at a higher rate. If I transfer a portion of my income to my wife, what will happen? She doesn't have anything. She is zero in terms of income. She will have that 10,000 rental income in her income tax calculation. What will happen? Employment income, my wife, employment, let's say my wife's name is, let's just say Angela. Angela has employment income 0. Rental income 10,000. Other income savings 0. Total income 10,000 minus personal allowance 12,500. Taxable income 0. So it's a tax-free income. Tax-free income which is available to everyone. So we will be deducting that part. Or maybe we can say that there is a portion of your income which will not be taxed, okay, which is allowed to be not to be taxed by the HMRC, and that figure is 12,500. That is called your personal allowance. Where exactly the personal allowance will be used later part, don't stress yourself, because there's a format where you can plot everything. But as of now, you should be remembering that everybody is entitled to a tax-free income of 12,500 to be deducted from their total income. Every person, not companies, every person. Okay, I hope there will be a question. If there is anything you want me to repeat, please let me know so I can repeat it again. Yes, please, quickly. Shall I repeat it again? I'm waiting, come on. Or shall we move forward? All good. No, sir. Thank you so much. Thank you. Really appreciate it. Okay. Who will be taxed? Individual. And frankly speaking, there can be a tricky time in your exam where examiner will put some extraordinary words which you don't expect. And I will be very frank with you, because all of these scenarios are coming from practical life. Now, let me just tell you, when it comes to individual, who comes under the definition of individuals? Men, women, okay, broadly speaking, elderly, children. Okay, is there any other sex also? Yes, there is another sex also. People are gay, homosexual. It's legal in UK. Maybe not in my country, but we are talking about UK. It's legal over there. So they are also. So maybe he's gonna trick you with a person with a scenario putting it down that these two people are civil partners. They're not husband and wife. Civil partners are the same thing. Husband and wife. I hope he will not put something like boyfriend and girlfriend, but apart from that, everything comes under the law. So even if you are all individuals, so let me just tell you who comes under the definition of the person who should be taxed. All individuals, including children, are chargeable to income tax. Both spouses within a married couple are treated as separate individuals for the purpose of tax. Both, again, individual. Never think my wife's income is my income or my income is my spouse's income. No, my income is not my child's income. My income is my income. Why my income is my income? Because for the purpose of tax, they have given me my identity. I have my passport. I don't share my passport with my child. Do I? No. Do I share my passport or my national identity card sort of thing with my wife? No, I don't share anything. It means I am an individual, separate legal person. I will be taxed on my income, not on my wife's income, not my father's income, mom's income, child's income, anything. So that's why when it comes to it will be tricky, because when you don't have the practical experience dealing with the scenarios, the only thing which mixes into your mind is when it comes in the scenario And in the scenario, in the question, they are describing two people's income and both are married. And you start mixing it up that maybe I should put the entire income of two individuals in one platform. No way. There is no way. You should write down this thing. Individual are all separate regardless of their sex, age, or anything. Okay. So second is tax residency. What is residency? We have learned that in UK, if you are an individual, you will be taxed regardless of your age, whether you are married or no. How you will be taxed, we learned that. In which period you will be taxed, yes. But there is one thing remaining. Can UK government tax me while I am living in Dubai? I don't think so. Why? Because I am not a UK residence person. I am not UK resident. So there is a definition for the UK resident, which will also again will come at a later stage. But as of now, remember, resident is a person who either lives there or who holds the nationality of that country, okay? Or in any other case, who owns a business over there. So these are the mere definitions of a person being resident in a country. So in this case, the tax residency status of an individual determines how much income is assessed to UK tax. All persons resident to tax purposes in the UK are assessed to UK tax on their worldwide income. Worldwide income. So please remember this part. It will be examined in your exam, mark my words. If a person lives in a UK, he has a company in Dubai also, he is receiving dividends from that company. He will be paying tax on those dividends. It doesn't mean that the income which is actually derived within the UK is only chargeable for tax. No. Any British citizen, anyone who has a business outside UK, who has a temporary job outside UK, who is receiving benefits from there, who received gift from outside UK, who owns shares in a company outside UK, who do even freelance work outside UK, will be paying tax regardless of what type of income he's receiving, as far as he is receiving income. So residency status, there is a definition on the residency status, but as of now, you should remember, resident mean a person who is actually national or living over there. So this is the basic definition as of now, because I don't want to complicate things in your head, because if I give you the residency definition, it has so many days and criteria and everything, it will mix up in your mind. So as of now, who will be taxed? An individual, including children, including both separately, both married couples or civil partners even, okay? Person who is resident means who is living over there or who is national or anything like that will be taxed on their income. So who will be taxed is this definition. An individual, regardless of age, even children, living in UK or British national, resident income being derived within the UK, income coming from outside the UK will be taxed. Okay, is there anything you want to clarify right now? Please, quickly, if you can tell me so we can move ahead. So are we clear on the point of who will be taxed? Okay. I haven't checked one thing until now. Okay, how many participants do we have right now? Okay, we have 8 means 7. Some people are not responding. My only request and wish is that everybody should participate. So, very good question. How can a child pay tax considering he does not have any bank account? It is not mandatory to have a bank account. Nobody in this world can ask you to have a bank account. That is for sure first time. Having a bank account is merely a system requirement, is not a legal requirement. I can give you hundreds of examples. My mother is receiving pension these days because she is retired. Okay. She doesn't have a bank account until now because she doesn't like it. She is receiving money every time from a branch, but just showing her ID. My salary living in Dubai can also be received in person from a branch, even though there is a government system. Even though there is no check system here, like there is a check system, but for salary payment, they don't give us checks. There is a system of wages protecting system here. It will come from my company's account to government account and then to come back to me. I can receive it in person. So the person, for anyone, child or no child, bank account is not necessary. But let me just tell you, why children has to pay tax? Remember I told you something, inheritance? That part. So let us say a 13-year-old child who has received a mention from his father at his death. Or his living father has gifted that huge mansion in central London to his 13-year-old son. Don't you think that son who is receiving that house should be paying tax? Even though he will not pay tax like from his pocket or from his pocket money or anything, or maybe he will be asking the same father for the tax, but there will be a tax transaction in the name of that child to the HMRC. So that is the only point. Why children are also. Children will not be working, children will not be employed or self-employed, but maybe a children is a shareholder, a minor shareholder who is receiving dividend against his investment. Same investment which was being held by his father, now it is his investment. So practically speaking, there are so many different scenarios. So bank account is not the case. It's not important. It is not mandatory in any part of the world. Trust me, let's just say if you are, even in Mauritius, I would say, if you are from Mauritius, or even you are from India or Pakistan or UK or Dubai, you're not required to have a bank account. You can handle your affairs without a bank account. It is not mandatory. So are we clear on that part? Shall we move forward? Because we have only 5 minutes to 10 minutes left in our today's lecture. So I want to wrap up. Good, thank you so much. So, okay, student, I have one more thing to tell you. I was talking to the management, so I will ask them to create a WhatsApp group. So we can communicate also after hours, and trust me, I don't mind. I'm a never-minded person. I don't mind. You are asking me a question at any hour. As per my convenience, I will try to get back to you, okay? I will also give you my personal email also. You can write to me at any time. Don't worry about that. So let's just move forward. Let me just erase this part here. Okay, we are good to go. Now, married couples and I am so sorry, civil partners should be civil. Okay, my typing mistake. There are special rules governing the allocation of income between spouses when assets are jointly owned. That is the only reason why we are discussing this part. Because imagine, when you are married with someone, it is possible you will own the house jointly, It is possible you will have investment jointly. So how you will be taxed if house is being owned by two people? So there is a separate law. So just imagine if there is a question, and I have seen multiple times questions on, you can say on married couples, when in the scenario it was mentioned Mr. X and Miss Y are married or civil partners, and then there is a mixture of information available on both of their incomes. So you need to identify, when calculating one person's income tax, you need to identify that you should be allocating only his or her part of income tax information in that calculation. So when it comes to jointly owned asset between married couple or civil partners, you should be considering that there is a rule which defines people having jointly owned assets, that how the taxation will work for them. So this is a very, very minor point which you should be considering when only it comes to married people jointly owned assets, how we will be splitting those assets. Generally, income generated from assets jointly owned, consider 50-50. There will be a scenario where it will be mentioned precisely house is owned 60% by husband, 40% by wife. Then it's 60-40. But generally, when it doesn't say on the ownership how much percentage is being owned by one person, then it is 50-50. So this is a rule of thumb. No percentage mentioned, 50-50. Very simple. Or otherwise, they have an option. See, tax avoidance. They have a choice of election also. They can tell HMRC, can you please divide this part, give the ownership in record only for the purpose of taxation, not actual ownership transfer. Just tell HMRC, actually this house is owned 80% by my wife. I am 20% shareholder or owner in this investment or in this house. So HMRC will say, we don't mind, as far as you guys are giving us the information, we will calculate your tax liability as per 80 and 20. So election, whenever the election word will come, I'm sorry, this thing is actually moving. Let me just straighten up. So whenever the election word will come, you should always think that it is in the power of taxpayer that he will be telling the HMRC the percentage of ownership or the date or any matter on which the election is being made. So for the jointly owned assets, other than 50-50 ratio, an election can be made to HMRC. Elections means write a letter, official email, anything, fill up a form, okay, for the income to be taxed on individual spouses according to their actual percentage of ownership. So they can tell us, actually, she owns the house 80%, I own only 20%. And they will do it accordingly. Or if they will not say anything, HMRC will consider house is being split between two partners, 50%, 50%. So house is generating a rental income of £1,000, 500 is my income, 500 is my wife's income. Or this investment is bringing annual income of £1,000, or let's say £2,000. We told HMRC investment is actually owned 80% by her, 20% by me. I will have 400, she will have £1,600 in her statement as an income. This is actually the what does the law says. Again, civil partners, same-sex couple registered as civil partnership. As I mentioned before, do not confuse yourself. Even if there is a modern terminology which doesn't really apply in our countries doesn't mean it will not apply in UK. In UK, it's legal, are treated as same way as married couples. So don't worry about that part. Okay, so is there any confusion? Or let me just repeat one more time. Jointly owned assets are when the asset is being owned by, I am sorry, let me just take care of this part. Is it good? Yes, it is good now. So when an asset is actually owned by a married couple, so how we should be treating? Scenario number one, if they will not say anything, HMRC will say the asset or the house or the investment or anything is owned 50-50. Or they have an option to declare the actual percentage or of what they believe or what they have an agreement of. Okay, they will tell HMRC, no, actually it's 70% mine, 30% her. HMRC will divide the income derived from that thing with the same percentage. Simple. So, is there anything I should be repeating until this part? Please, you can tell me and I will be, okay, we have a, no, we don't have. Any question? Because I will be summarizing everything now and I will be, it's clear. Good. Now, please listen to me. Most important things I told you today, we are going to attempt an exam which is based on a law. Try not to find logics. My personal advice. Try not to find logics. You can check 2011, starting from that point until now. The main reason of failure for students is they have the knowledge, they don't know how to apply it. Lucky for you people that right now you have multiple choice questions for 30 marks. It means 30% of your exam is secure. There is no need to give explanations. Even examiner has mentioned for a multiple choice question, there is no need to write down on the 4th page of your Excel sheet that note for question 3, this is my explanation why I wrote that. No, that will not be considered. Try to be focused. Focus will keep you in that required jargon which is required for this exam. This exam is not an advanced level exam. So even though corporation tax will not be taxed at an advanced level, income tax will not be taxed at an advanced level. So it's a small subject which require focus as per the exam techniques. One by one, I will keep on revealing those exam techniques to you. Until now, okay, somebody has asked, what is the pass mark for F6 for all the ACCA exam? It's 50 marks. You have to score 50 out of 100 and you are pass. So ideally, a person who is going to top in Mauritius or in any country, he will be securing 96 marks. Yes, a person who's going to score first position worldwide, he might have 98 marks. Yes, it's a numerical exam. You should expect that. I know a student. She topped the worldwide in my time. She had similarly 94 marks, I think, worldwide, or maybe similar to that. So please be focused. Do not compare F6 with F8, with business analysis, with anything, with even P1 exam. It is a law. You should compare it with F4, which is also a law, where you have to memorize the law. You have to be very clear on its application. When it comes to the application, the calculation will be set standard format. That's it. No big deals. So until today, we have learned only the basics and the things we need to remember while preparing. So please, when it comes to the next lecture, same time, same next Friday, I will only expect that you have somehow built that aptitude, that you will be focused and you will be considering this part as an law, and law doesn't sometimes gives justifications or logics, even though there will be logics in all the parts. Okay, if there's any question, please let me know. Otherwise, we will be saying goodbye for now, and I will be again telling the management of our institution to share my personal number and my email address, which each and every one of you. So yeah, so there's a question. So can we get a list of what you will be explaining next time so we can read it beforehand? Yes, we can do that. I can ask, I have given the entire schedule of my lecture until October end to the institution. Okay, I will ask them to share it with you. Yes, or maybe I will ask them to create a WhatsApp group, okay, for me and for all of you. So what we can do is we can share after like today's lecture. Tomorrow I will share the next topic. Okay, so you can, yes, that's very good actually. Yeah, that's very proactive. Yeah, we can do that. So it depends whether by email or WhatsApp, whatever the institution of course will do, we can do that. Yes. Is there anything? Okay, yeah, that's great. Okay. Next lecture will be Friday. Next lecture will be Friday, same time, 7:30. If you have a problem with the time, you should be speaking with the management. I hope there is no issue with the time. And Friday is off, actually, public weekly holiday in Arab countries. So yeah, it's also convenient for me. So, okay, perfect. Thank you so much. And I wish you all a very good evening. Okay, try to memorize or just to brainstorm whatever we have learned. Okay, and hopefully with my practical experience, I will try to elaborate things in much efficient manner for you all. Okay, thank you so much. Goodbye.